Thank you so much for joining Julie here on the Dwellynn Show. I'm your host, Ola Dantes. I cannot wait to jump into this session. Julie is just amazing. Good Egg is an amazing brand, and I'm just so excited to have you on the show today, Julie.
Thanks so much for having me. I'm excited to be here, Ola.
Sweet. All right. So let's jump right into it. I mean, Julie, I have to say, first and foremost, Good Egg investment is probably, and this is going on video, probably the best real estate investing syndication brand, or even in real estate that I've seen. Maybe Buzotto, which is a company in Maryland. You guys do a great job on your website. Anyone listening to this, go check out goodegginvestments.com. I think that's the website. You guys you're just amazing. I love what you guys are doing. I want to be like you guys when I grow up. So I had to just put that out there. I just had to.
Thank you. Thank you so much. Yeah, because of what we do with the equity raising, I think it's really important to have, a strong brand. So yeah, thank you.
Sure. So, I mean, I'm sure you can do a way better job than I can in terms of telling our Dwell listeners a bit more about yourself, what you guys are doing at Good Egg. Just kind of give us a spiel, kind of what you've been up to lately, actually.
Yeah. So I'll give you the quick rundown. I got into real estate back in 2009. I kind of fell into it accidentally. I was looking to buy a home with my husband. I was not necessarily intentionally looking to get into real estate investing. And we ended up house hacking that house. And house hacking, for the listeners, in case they don't know, is when you buy a home and you rent out some of the other rooms and you live in, one room and you offset your mortgage expenses. And that was kind of my introduction into real estate. And thought, I live in the Bay Area and this is amazing, right? To have so much of your, your debt obligation being paid off by someone else. And that sort of was my foray into real estate. And we ended up buying more properties here in the Bay Area from 2009 and 10, which was like an amazing time to get in. And again, had no idea what we were doing and just thought, this property was worth like double what we're paying for it like a year or two ago. So this might be a good idea. When the market recovers, we could sell. And so as the market cycle started to mature in 2014 and 2016, we started to sell those properties. And I thought to myself, what's the highest and best use of this money that we're coming into? And I thought, I could go out there and, buy a bigger home. And which I think is what most people do, is as they advance in their careers and make more money, they go out and they get into more debt, right? And as we were looking at our mortgage expenses, I thought, this can't be the way to build wealth. Properties here in the Bay, 5 and 6 caps. A 5 or 6 cap, back then it was like the cash flow was going to be very little, and so I thought, okay, this isn't going to work. And really, what I wanted was cash flow, and so I started looking at out-of-state investments and rental properties, and bought a few of those. And didn't get too far down that road before I realized that I wanted to get into multifamily so I could scale and go far. Investments is we help investors get into syndications, which is the large apartment buildings, the acquisition and the management of it, and we help them create passive income at Good Egg. And that's kind of my passion. Is it's kind of twofold. It's one, education, but then also bringing great opportunities for investors to invest in. So that's what we do, and that's what we're super passionate about. So yeah.
Yeah, awesome. I think before I really want to definitely touch on, I think the Passive Income Academy. I love that. I saw that you launched that. I don't know if it's launched yet, but we can talk about that later. Yeah. But I'm just kind of curious, if we go back a little bit. So you obviously house hacked, and then you felt like, the caps here are, extremely compressed in this market in California. So you started buying out of state. So can you kind of walk us through that process? Because if a Dwell listener is listening to our conversation and thinking, well, actually, I'm in kind of the similar boat. Maybe I'm in New York City or DC or maybe California, but I'm thinking of buying out of state. What was that process like for you?
Yeah, so that's such a good question. It's not one I get to really dig into too often, because it certainly was a process. I came across a website you might have heard of called Bigger Pockets, and I just started networking like crazy. I was like, oh, out of state rentals, this is interesting. Okay, well, first I need to figure out what market do I want to buy my out-of-state rental in, and just started searching and researching those markets on Bigger Pockets. And then I just started connecting with people who were in the markets that I wanted to invest in, other kinds of that I started reaching out to people. And as I started to connect with those people, I started to discover opportunities, and I started to do my underwriting. And I said, okay, you know, if I buy this house at, you know, like for example, one of the properties that I purchased in Michigan, I was able to close it for $54,000 all cash, right? And so I thought, okay, I'm going to buy this property for $54,000. I'm going to put some renovations into it, and the property manager helped me run these numbers. So that's an important note, is that if you can find a good property manager, you know, who will help you sort of run these numbers and understand, okay, what can I rent it for? What are my expenses going to be? What is this neighborhood like? You know, how is my occupancy going to be? Is it going to be, you know, vacant half the year, or is this a pretty high demand area? So having that conversation with the property managers, I would say is pretty important. And finding a good property manager. At the end of the day, you have to think of the property manager as somebody who, you know, is watching your suitcase of money, if you will, right? Like, you want to make sure that that person is going to be a good steward of watching that suitcase of money for you. So I would say that connecting with a good property manager is really important. And then, yeah, we ran the numbers, and I closed on the property, and that property manager also has an arm of their company that does construction. And so they helped me go in and do, you know, all of the renovations that were needed, and then they helped me rent it out. So it's kind of a full service company. So if you can find a company that does all of the above, you know, helping you maybe connect with a wholesaler, you know, finding the contractors, and then getting the property rented, like that's really the best and easiest way to do it. And they still manage my property today as well. So that property we bought it for 55. We put in about 15,000 into the property. We took it to a bank and then refinanced out most of the money. So I have very little into the deal, which I don't know if your listeners might be familiar with that strategy, but it's the BRRRR strategy, right? Where you buy, renovate, refinance. And so I have very little into the deal, and yet I'm cash flowing, you know, a lot. Close to probably $800-900 a month on that property, even though I maybe have 10,000 into it. So, you know, that it's great if you have the patience to do all of the, you know, the renovations. And, you know, I did go through a vacancy in the few years that I've owned it. So, you know, that's never fun, because turnover costs and vacancy, all of that is what eats up the returns. Yeah, that's kind of the process that I went through to find those properties. So
yeah, thank you so much for sharing that, because, you know, people just think, well, how do you do that? They can't even sometimes wrap their minds around, you know, I've had guests on the show that actually buy properties and they've never ever seen the property. And a lot of folks sometimes just can't wrap their minds around it. But I think you've really emphasized just having that team of folks around you to help you, you know, run the project and maintain the asset after stabilization. So thank you so much for that.
exactly.
So, yeah. So the next thing is, so you went on to bigger assets, and I just kind of wanted to see the similarities in your process when you kind of moved from, you know, some of the smaller assets to, you know, buying. I think you guys have about 3,000 units now, and a lot of, you know, self-storage units as well. So just kind of walk us through the process of, you know, having partners in these bigger assets compared to the smaller ones.
Yeah, so as I mentioned, I started off first investing as a passive investor, and that really was what kind of like changed my perspective of how I can get into a multifamily deal. So, you know, when you want to invest in multifamily, there's a gazillion different roles that, you know, go into acquiring and managing the property, right? And so I didn't even know. I naively reached out to someone of bigger pockets and said, hey, do you want to partner up and buy a multifamily building with me? And that person said, well, why don't we hop on a call and let's learn more about what your interests are? And it was from that first phone call that I learned about the opportunity to be an active or a passive investor. I didn't even know that there was a difference. He asked me, do you want to be active or passive? And I said, well, active if you need me to be. I didn't know what I was going to need to do to, you know, to come to the table to be a part of the deal. And so, you know, there's so much that needs to be done. And so, like I said, I started out as a passive, and I realized that I loved being a passive investor, you know, and so I was still acquiring the multifamily building and owning it and sharing in all the benefits of owning a property, like the cash flow and the equity on the back end, and you know, all of the tax benefits as well. well. And so I did all of that, and just kind of realized that that's where my passion was in sharing my my knowledge about being a passive investor. And so that spurred the opportunity for me to participate on the active side of the deal and be a general partner by helping bring equity to somebody else's deals. And so that's kind of how I got into it. And, you know, like I said, from in the beginning, I had no idea that there were all these different roles and ways that you can contribute to the acquisition and management of the property. And so that's kind of how I made the transition. Was I figured out, you know, what was my passion and what am I good at, and then leveraged that and brought that to the table for someone else who maybe doesn't want to focus on that, or, you know, that's just not their specialty, you know. So yeah.
Absolutely. Thank you so much for that. So if there's somebody listening on and they're thinking, well, actually, yeah, I have been thinking about getting into syndication, right? And even if that term of itself sounds a little bit scary, right? And they're thinking, you know, what would be best for me? Do I want to start being on the active side, or do I want to get in on the passive side? You know, what would you actually just say to that person, just on a very broad perspective?
Yeah, I mean, on a very general level, my advice would be to start off as a passive investor, because you're going to decrease your risk. So, you know, if you invest in a deal and you lose $50,000, not fun, but, you know, is not going to be nearly as harmful to your career if you lost somebody else's $50,000, right? So before you actually start doing deals, you want to make sure that you understand how the deals work, things to look for, you know, what markets to invest in, what partners you want to work with, and all of that good stuff. And, you know, the best way to really do that is for you to walk in the shoes of an investor first and think, okay, what are the questions I would ask? Because you are about to, you know, get into a deal as an investor. So what are some of the things that I would want to ask? And really walking in the shoes of an investor first, for me personally, was really the best way, because I decreased my risk. I earned a great return while I was getting my education. In all of the investment summaries that were presented to me, I started to really understand, you know, what are sponsors looking for in the deals that they're doing, and what makes a good market, what makes a good deal, how are deals structured. You know, I started to understand the flow from, you know, the time I put my investment in to the time I close, monthly updates on an investment. So, you know, I would really say that that's the best way for me anyway, was to get in as a passive investor, be a part of that deal, get the updates, you know, understand how the deals work first while you're earning a great return. And then you can figure out, okay, what out of that whole entire process I just went through and learned about, is there one piece of that that I think might be interesting to me, or that a place where I can add value, you know? So there's, you know, the underwriting, there's, you know, the acquisition side, there's the asset management, the equity raising. So what, you know, what part of that might be interesting for you, or what part of that might you be really good at, where you can, you know, someone else, an operator, might be able to leverage your, you know, your value that you bring to the table in that regard. Because, you know, with an acquisition of multifamily buildings, there's so much to do. It's never going to be that just one person goes and does an entire deal by themselves, not on a larger scale, not these like 200 plus unit buildings, you know? So if you can identify what in the process you're good at, and where you can add value, I would say that that's, you know, that's a good way to look at it. But I think starting off as a passive is really the best way, if you can. If you're accredited and, you know, you qualify and you have the money to kind of quote play with, I would say that's really the best, least riskiest way to get into it.
All right, so this is definitely more of a question from me. I'm just curious. So now you know, you bought the smaller properties. You obviously housed back in the beginning, and now you have these bigger assets, right? You know, would you ever in the future just kind of divest the smaller assets and just like roll up that capital and deploy it strictly in multifamily? And if your answer to that is yes, why?
Yeah, so so those properties that I bought before, I still have them and I still own them. So I honestly, I don't think so. I don't think I would. And the reason is because the return on those few properties that I still own, you know, is pretty good. It's much better than, you know, I mean, the returns on syndication are great, right? You're looking at an 8 to 10% cash flow with another 8 to 10% on the back end. So roughly about a 16 to 20% annual return, right? But on these other properties that I own, the cash flow percentage wise is much greater. But, you know, would I go through the process again to start buying more properties to go that way? Probably not. So, you know, it's a time, money issue. So do I have time or do I have more money? And I would say, that it's a situation where I don't have as much time right now. So yeah, I appreciate the few rentals that I have, and I think I'm just going to keep them right where they are and continue to focus on multifamily, but I don't think I would let those go. Yeah.
Okay. Yeah, definitely just something on my mind I was thinking about. Okay. So
Yeah.
I definitely want you to touch on the Passive Investor Academy. I saw that on Facebook. I, picked into it. I really thought it was very, very interesting. So just tell our Dwell listeners a little bit about, what the Academy is trying to do essentially.
Yeah, so the Passive Investor Academy is really came about because, when Annie and I first met, we started talking about, the education piece of getting into syndicated deals is such a big hurdle for people. You think, just like you mentioned earlier, you hear the word syndication and you immediately are turned off because it sounds so big and scary, and it was like that for me as well. And you're like, okay, I want to do the syndication thing, but where do I start? What is a syndication? How do the deals work? How are they structured? Who are the players in the deal? What kind of returns do I get? There's all these questions. And when I started investing passively, there were zero resources out there. I mean, I was handed an investment summary and, was like, here you go. Here's the deal. Let us know if you want to invest. And I'm like, what do you mean? Like, I don't even know, what do I look for? What's important? What's meaningful? And all of that. And so we decided to create the Passive Real Estate Investor Academy as a place where people could go, as a resource, where they can go if they want to get into syndications, but they want to make sure they don't make any mistakes getting into them. And so really it's an educational resource for people who want to get into syndications, but don't know, much about it and don't know where to go to learn about it. And so really we hold you by the hand and we take you from it's really made for the person who doesn't really know anything about syndications at all. And we take you from the point of not knowing anything at all to getting to doing your first deal, to feeling comfortable to get into your first deal. So you'll understand, who the players are, how the deal structure is set up and why, you'll talk about markets and why we invest in certain markets, what fundamentals we're looking for. And we talk about the returns and what the returns look like. So we kind of just walk you through the whole thing so that when the time comes for you to make an investment, you're going to do so confidently and hopefully partner up with someone that is, a successful operator, right? And, unfortunately I talk with investors all the time and I see so many investors focusing on all the wrong things. And it's like that, you have to make sure, I would say number one priority is you want to make sure you understand the operator that you're partnering with, because this is the person, again, who's going to be managing your investment. And so you want to make sure that that person has a fairly strong track record and that they know what they're doing. It's not really the time at this point in the market cycle to be partnering up with someone who, where it's like their first deal and they're kind of experimenting and seeing. You want to know that somebody on the team has some significant experience to help guide those people. So so we created that academy. It is active. If anyone wants to learn more, they can go to passiverealestateinvestoracademy.com and learn a ton more of information there as well. So yeah.
Thank you so much for that. I really appreciate that. And thank you for putting that together, because you were absolutely right. When I did start my journey as well, it was just like, oof, it's just so, many information. And then you have to kind of collate things from bigger pockets, from books. And, it was just really interesting. Thank you so much for putting that academy together. So before we go into the quick rounds, I just wanted to ask you one last question. From what you know now from your, house hacking days to this very moment, if you were to give just one nugget, about just investing in real estate, what would that nugget be?
I guess I would say, be persistent. That's what I always say, is be persistent. If you want to get into real estate investing and you're just getting started, network like crazy, be persistent, because without that persistence, within the real estate world, there's so many obstacles that are going to come up and, you're going to say, nope, this is too scary. It's too hard. It's too this, and all these obstacles. And if you just continue to persist, you'll be able to overcome all of those obstacles and get to where you're trying to go. So I would just say my one piece of advice is just keep keep pushing, and eventually you will get to where you're trying to go. But without that, there's just going to be too many things that are going to come up and try to, discourage you from really moving forward. So yeah.
Oh, that's a good one. That's a good one. So we're definitely dwelling into the quick rounds. Is that going to be quick questions?
Yeah.
Quick answers. You ready, Ma?
Yeah, let's go.
All right. First question. What makes you, Julie, unique? What is that differentiating factor that separates you from the next girl or the next guy?
I am persistent. I would say that's one thing about me. I'm pretty persistent. I don't give up very easily.
Okay. Next question. What was the last book that you read, and what was that one thing that you picked up from that book?
So the last book I read was The Year of Yes by Shonda Rhimes. I don't know if you're familiar with that book. She's the producer of Grey's Anatomy and some other ABC TV shows. But it was just an amazing story of her journey in becoming famous and really having to do public appearances that she didn't necessarily want to do. She's kind of an introvert, but as you experimenting, that she was living a more fulfilling life. So great book, great takeaway, highly recommend it. Oh, awesome. Are you there?
Yeah, I'm here. Awesome.
Oh, there you are.
All right. Last question. So if I do have a strong listenership, actually, almost ironically, California instead of California. So if there's somebody out there or just somebody anywhere in the country thinking, really love Julie, I want to connect with Julie, what's the best place people can reach out to you? What social media platforms are you active on? How can we connect with you?
Yep. Yeah. So if anyone wants to email me, I love talking about what I do. I love talking about real estate investing. Anyone can reach out to me at julie@goodegginvestments.com. They can learn more. I'm also on LinkedIn. You can look for me there. And then we're also pretty active on Facebook and Instagram as well. So Good Egg Investments, you can search for us there. So yeah.
Thank you so much, Julie. It's been an absolute pleasure to have you on the show. I definitely cannot wait to obviously see you guys at the conference in a couple of weeks or so. So thank you so much.
Oh, thanks so much for having me, Ola. That was fun. Thanks.